All right, welcome back. Hope everyone's had a great weekend. Super Bowl Sunday, so the weekend isn't over. We've had a pretty slow couple days as predicted, low volume, low volatility. Pretty usual on the weekend, okay, guys? Let's take a look at the Bitcoin market cap. We're at 686,000 in real volume on Bitcoin. Slow day, slow yesterday, but we know this every weekend, okay? So it's not the best time to be trading, but we do have Ethereum up 5%, XRP's up 5%, 3% on BNB. So some minor gains all across the board. And I did forget to mention this is not financial advice. Do your own research, trade at your own risk, okay? Crypto Fear and Greed Index at a 57, kind of stalling out here. Not too greedy, but we are leaning in the greedy direction. Bitcoin block halving in 99 days, less than 100 days, guys. All right, so this is Crypto Rolly, the crypto watch that never stops. Live technical analysis, price predictions, and trading. Taking a look at Bitcoin dominance, you can see we have this horizontal support coming across on the Bitcoin dominance chart, and it's been respecting this support pretty much, looking to possibly break below. Is this looking like a bear flag? So if this breaks down here, that would mean that the altcoins are going to outperform Bitcoin. Now, if this breaks back up this direction, the Bitcoin dominance rises, that means Bitcoin will be outperforming the altcoins. So two different types of scenarios. Let's say Bitcoin has a nice little rally going higher and the altcoins pump even harder, you're going to see this fall. Or let's say Bitcoin falls and the altcoins fall harder. So if Bitcoin falls and the altcoins fall harder, you're going to see this go this way. Or if Bitcoin pumps harder than altcoins, this is going to go this way. It's very tricky to understand, but the more you look at it, the more you'll get the correlation, okay? Let's look at the CMEs real quick. CMEs. So basically we closed on Friday the CMEs at 94.40. Current price on spot is 94.30. So no big change, no gaps to really talk about unless we get a pump or a dump in the next couple hours before CME opens. But right now, I don't think there'll be much of a gap. We do have this gap down here coming in 92.50, 90 to 91.50 on spot. That's lining up with 9100 to 9000, something like that. And you have a miniature gap all the way down here too, okay? But moving back over to spot, a few things to talk about. Let's see. So we're going to start today more on the macro and move our way down to the lower time frames since it has been slow, okay? So I want to take a look. Let's say, let's get this to, okay, so let's move to the weekly real quick. On the weekly, everyone's been talking about it the past few days. I've been talking about this for over a week now. You have this horizontal resistance coming around 95.50 to 9600. It acted as support here, resistance, support, resistance again. So this was going to be an obvious area of resistance. Now, all right, so we're looking at that. Say we get a rejection. Let's just say that we do get a rejection here. Well, what we could possibly be looking at is an ascending triangle formation. So we have this upward trend line coming from way down here from the bottom. You had support all the way along here, and then you had support here as well. So let's say we do get a pullback. Well, we're going to look for this to continue as support. So possibly we fill out this region here. Just an idea, okay? So you have a horizontal, and then you would have an uptrend creating an ascending triangle. And maybe at that point, we break above, okay? Or say we are able to get another leg up and we break 96. You're going to want to see us consolidate above here and flip this from resistance to support like we had support here. And then you want to create that, okay? So this is going to be a critical resistance right now, and this is what everyone's looking at. We're all looking at the same thing. What I can say though is we're still hanging around here. We didn't get rejected hard. So the fact that we're still lingering in this area shows that the bulls still pretty strong, and we might get another push above, a test to see if we can break it and hold it. So just keep that on your radar, that this is going to be difficult to break, but we haven't got a massive rejection yet, so it doesn't look too bad, okay? Also, let's just look at the Heikin Ashis real quick. Heikin Ashi. Let's go to the monthly. Heikin Ashi. So on our Heikin Ashi monthly, we did get the reversal candle we were looking for. Wicks on both sides. Closed out green. This is looking pretty healthy on the Heikin Ashi. We'll go down to the weekly. Weekly is looking really good too. This is a great candle to look at for trends, because you can see once they turn green how long they can go green for. Also, if you're in a bear market, once they turn red for a while. Going down to the 3-day. The 3-day is still bullish. 2-day. Also bullish, but starting to close up. Potential reversal forming here. Going down to the 1-day. You do have more of what looks like a reversal possible, which, you know, would make sense because you had a lot of trading in this region, and as I showed you, the 9600 horizontal goes pretty far back, so it wouldn't be a surprise to have a pullback in this area. Okay, also let's go to the 12-hour. 12-hour, a little bit of indecision right here, but currently on a bullish candle, and on the 4-hour still looking bullish. Okay, so that's the Heikin Ashi. And also, I wanted to look at the fibs before I do my usual breakdown of each time frame. So let's go over to my BitMEX chart real quick. I have a nice clean BitMEX chart here. We'll go back to our candles. All right, so let's zoom out, maybe to the weekly. All right, so we can see when we had, if you draw this fib retracement from the 20K top down to low 3000s, when we had our rally to 14,000, we topped out right around the 0.618, the golden retracement. So the fib retracements work really well in crypto, and the 618 is always, you know, an area of interest. So we bounced off of that. Okay, so we're just going to move on. I just wanted to point that out first. So now if you draw a retracement from 14K down to 6,400 area where we bottomed out most recently, you can see that we are currently above the 0.382, which is around 9,300, and the 0.618 on here based off this retracement will come in at 11,000. So we are above the 0.382. If we make another leg up, 10,180, I think it's showing, would be the 0.5, so that would be the next area of interest, and then the 0.618. So maybe as far as this rally goes, we could go all the way up to 11,000 possibly, get a short-term pullback and consolidate above the 9,600, 10,000 area, getting our first higher high on the macro, because you had a high, lower high, and currently still putting in a lower high. So on a macro level, you want to get a higher high. So if we can break above this area, hitting the 0.618 on this retracement around 11,000, you'll get that higher high, and then maybe get a pullback retest of this area as support, which would be nice. You want to see a breakout retest and find support. Okay, so none of that would look ugly if we did get a pullback. If you look closer and say that this is the top and you want to look at a pullback currently, if you want to look at a pullback from here, we can, hold on, let me get my fibs, drag them back this way. Okay, so that's from this bottom to this top. Your 0.236 is at 8,800, which would line up right around where the daily 200 simple moving average is. So if we are going to retest the daily 200 simple, that would also be us bouncing off the 0.236, the first fib level. which also wouldn't be too bad. You know, we want to stay above the daily 200 simple, and for us to break above it and retest it would also be pretty normal. So none of this is looking ugly, but a pullback is possible. I'll show you why looking at the Stokes and all that, okay? So I just wanted to show you the fib retracement levels. Just put those on your radar. I hope those are helpful. Just keep in mind that 0.618 is an area of interest. So if we continue our ascent up, you could be looking at 10,100 at the 0.5 as a pullback, or the 0.618. Okay, just some possibilities. Let's go back over to my Bitstamp chart. All right, and we'll start with the weekly and do the usual breakdown. All right, so let's pull out the stochastics. So your stochastics still rising up and looking good on the weekly. The RSI broke out of this downward channel and formed a new higher high on the RSI, so that's also nice to see. Your EMA MAs, we definitely, found support above the 21 EMA. As long as you're above the 21 EMA on the weekly, that's a macro bullish signal for a bull market. Okay, and we're putting in a nice weekly candle. This is actually going to close at the end of today. So this is looking like a solid bullish candle on the weekly, and we will get that close today. But what I can say is, say we do pull back next week, I would say the bottom, the open of this close would be a nice support level. That's coming in, the open is at 8,600, okay? So often you will see, like, okay, you look back here, you can see that this candle on the weekly was a very nice candle, but we didn't just immediately shoot up the following week. In fact, we had a pullback down here, all the way down. So, and again, you can see that on this weekly candle. So if we get a wick down and a bounce in next week's candle, that would also be perfectly normal. One way to trade, candlesticks is basically, especially like if you're looking at higher time frames, weekly, daily, 4-hour minimum, but even the 4-hour is kind of a little too low of a time frame, preferably 12 or a daily. You're going to want to put, so say you bought up in here, you want to put your stop at the bottom of this candle, because it is normal for there to be a retest, but you can see we never went below that candle. Again, here we did have a pullback but didn't go below the open of this candle. So again, what I'm saying is we could get that pullback but not go beneath the open, which was at 8,600, okay? And let's look at our Bollinger Bands real quick. Bollinger Bands, we are meeting resistance at the top Bollinger Band, so no surprise to kind of slow down right here. And the bottom, or the middle BB, is coming in at 82.43. We are in the bullish zone of the Bollinger Band, so that's good to see. And on the Ichimoku cloud, we're still in the cloud, and the bottom of the cloud support is going to be at 86.83. The top resistance is 10,300. We would like to get a higher high, break this cloud, consolidate up here on the weekly, have this close up and form a green cloud down the road. Okay. While it's on my mind, also, we did have the monthly close just the other day. So let's look at the monthly. So this was a bullish engulfing, bigger than this candle here. We closed above that. That was going to be resistance, the top of this monthly candle, and we did break above it. So that looks very bullish on the macro. But again, you can see that you have wicks often. So there was a big wick here. You have a wick here. I mean, look at this one, crazy. So if you were trading on the monthly, you put your stop below here, you had the wick come all the way down and then got your bounce. You wouldn't have been stopped out if you were trading the candlestick stop loss method with that one, okay? So can we get a wick down here and then a bounce? Yes, we can. So, these things just don't go straight up or straight down. There's going to be pullbacks in between, okay? So anyways, that's that. Let's move on to our 3-day. want to look at our stochastics on the 3-day. The 3-day is getting pretty high and tired, which also could be indicative of a pullback. However, this is what I wanted to talk about as far as the Stokes and the RSI, because you can see here that the Stokes on the 3-day were high right here. And if you were looking for a pullback just based off the stochastic, well, you would have got wrecked, because we just stayed in this upper region this whole way, like almost 2 or 3 months right here. So, look, we just got up here. So there's plenty of room to go, and you can see that the price just continued to go up. So I wouldn't say just because we're high on the 3-day stochastic that we need to get a pullback. And also, I would say, I'm just going to skip over the 12-hour just real quick to show you, because the 12-hour stochastics do get them pretty well often. But basically, when you're in a downtrend and you get the cross from the top, that's a very good signal, okay? But when you're in an uptrend and you get to the top and it looks like a cross, it's not as strong of a signal. If we're in an uptrend and you get a cross up from the bottom, that would be a strong signal. So in uptrends, I'm looking for these crosses coming from the bottom, especially like a 12-hour. You can see how powerful that cross was here and here, okay? But when you get the cross down in an uptrend, they're not as strong. So you got a little cross down here, and we hardly even got a pullback. So in downtrends, you want to look for the cross down from the top. In uptrends, you want to look for the cross up from the bottom, okay? So that being said, our Stokes are high, but that doesn't mean it has to come down right now. In fact, the 2-day Stoke has got a nice cross back up right here, okay? Going on to the daily. Your daily getting high, curling over, however, hasn't crossed, so nothing to be alarmed about. Your RSI, we did get a higher high on the price, and the RSI kind of is flatlined. It's not complete bearish divergence, but it's starting to possibly form on the daily, but nothing to be alarmed about again. And again, when we're pumping, the RSI is not as important to me. What can I say about the EMA though? So we did get our golden cross, the 50 EMA cross above the 200 EMA. We didn't have an immediate reaction yet, but overall this is bullish on the long term. If you close these, let me close out the rest so you can see this nicely. We'll just do a quick one of these. I went in depth on Friday. It's called Bitcoin Bull Market Indicators on Friday. I showed tons of macro bull market indicators, this being one of them. So if you're interested in seeing that more in depth, definitely go back and watch the previous video. But you can see when we got the golden cross back here, we had a nice rally. It was over 150%, I'm pretty sure. And then if you continue going back even further, all the way back to 2015, we had a golden cross here as well, and you had about a 7,000% rally to the top at 2017. So when these golden crosses happen, a rally is usually going to come after. Doesn't happen immediately, but over time for sure. So this is healthy to see that happened. Also to get a couple daily closes after we had the golden cross. Looks nice. You're having some divergence. The 50 EMA is starting to get further away. So it's not looking so much like a fake out right now. Looks nice to me, okay? And then let's put our other major moving averages back on. All right. So yesterday we had a bit of a drop in price, and we almost came down to meet the 10 simple, this blue 10 simple moving average on the daily. Didn't quite hit it, but pretty much a test of it, and we got a solid bounce. So that was good to see for the bulls. Your 100 EMA is about to cross over the 200 EMA, pretty bullish. 21 EMA is looking to cross over the daily 200 simple, this pink 200 simple pretty soon. So having all your moving averages cross back above is also good to see. But we do want to maintain this pink 200 simple to continue all this bull talk, okay? And let's see, what else do we have here? Ichimoku. Ichimoku, your conversion line support's pretty far down. This will gradually rise as well, so either we could get a pullback down to meet it, or we'll just continue more sideways, and this will end up meeting it somewhere around here. And you can see the last time we finally met it, well, actually we had a solid pullback here, and we came to meet it, and we had a nice bounce on the daily. Also, the cloud closed up, and we have just a hint of green forming. So if we continue in this region, you're going to see this green cloud get a little bigger. Also good to see on the daily. And our Bollinger Bands. Bollinger Bands, we hit the upper resistance here and floating sideways. Your middle BB is coasting high right now, coming in at 88, 89. That would also line up pretty much with that pink 200 simple, and also the top of this region here. So this could be the support, you break out. So this was a resistance, a horizontal resistance coming across, and we got rejected. Then and we came here and couldn't quite break it. On the next candle, we did break above it. So could we come back to retest it? That is a possibility, which would line up with your middle BB and also the daily 200 simple, okay? And that's that on the daily. Let's go down to the 12-hour. On the 12-hour, we did get a cross down, but it wasn't harsh. And we're kind of like, it looks like it might get a cross back up, especially if we do pump in the next day or two. This will probably just cross back up. But if we get a dump, it'll start to continue downwards. But like I say, it's high, but nothing aggressive right here. It's not looking like this one here or this one here, okay? And the fact that we came up to a major resistance area and didn't get rejected immediately shows that the bulls might put in another leg up. Maybe we get rejected on the next leg up. We'll have to see when that happens. Your middle BB support on the 12 hours, 9,008 on Bitstamp. Ichimoku clouds, your blue conversion line is support at 88.90. So again, that area is lining up around the daily 200 simple. And if we look at our moving averages, so the moving averages yesterday, we were trading beneath the 10 simple, and I said if we got a close beneath the 10 simple, we'd come down to the 21 EMA, and we got that move, basically bounced off of it. But it was the weekend, so we got a dump. But the weekend, you're not going to see the strongest moves. So the bears did try to throw a dump in, but it wasn't too strong, and the bulls bought it back up. So far, though, the bulls haven't maintained too much momentum to the upside. Could that change once CME's open or tomorrow, Monday starts? You can see the big drop off in volume right here. So I don't think we'll see any drastic move until the volume comes in. But the 12-hour did close back above the 10 simple and still maintaining the 10 simple right now. If we do get a close beneath the 10 simple officially, then you can be looking at the 21 EMA coming at 9,097 as support again. And if that level breaks, your 50 EMA is down here at 86.94. Stokes went over that. There is bearish divergence on our 12-hour RSI. You can see just a little bit. You can see that you had this higher high, like a higher high, and then this is descending right here. So that was also making me think that possible pullbacks coming in, but it was the weekend, so there's no strength in any move in either direction. Okay, so we'll have to see. It's too hard to trade if you're looking for little movements or larger movements when there's no volume. Okay, it's just there's not enough power unless a whale just wants to just do a massive buy or sell, and then the movement's huge. It's just going to be a ridiculous movement because there's no liquidity and the whale can just move the market. That's why the weekend, it's either very slow and not worth your time, or a ridiculous move comes in and better hope you're on the right side of that. It's kind of like a gamble. Going to the 4 hour. The 4 hour, you do have a cross up, so that's good to see for the bulls. You had basically a downtrend right. I don't like all these lines. I'll just point it out here. So you had this downward trend line, and it looks like we kind of went to break. We got a higher high right here. We'll have to see. It's starting to curl back over. I'll keep that on my radar. But you did have this like basically falling channel here on the RSI. So possibly we could look to break above here, or we'll just continue our descent and maybe get a bounce down here. If we get a pullback, you'll look for the RSI to bounce down here. Okay. Looking at the moving averages, on the 4 hour, we bounced off the 50 EMA around 9100, closed back above the yellow 21 and the blue 10 simple, and we're using the 10 simple as support right now. About 25 minutes left in this 4 hour candle, still above, so looking good. Like I say, might go for another attempt up here. And your Ichimoku clouds, the blue conversion line was acting as support. We broke beneath it, had a test down, picked back up, and using it as support again. It's coming at 93.50 will be your support here on the 4 hour Ichimoku. The cloud is starting to rise, so we'll have to see, do we, come down this direction and then bounce off of our cloud. Okay. Looking at the drawing tools, you can see pretty obvious range right here. Let's see. Okay, there it goes. So you have this horizontal support. Each 4 hour candle has closed back above it. If it wicked beneath, it closed right back above it. If you want to get exact, this is around 92.50, 92.45. So if you get a 4 hour close beneath this horizontal 92.50, let's say, that might be the signal for a further drop. But also you had a horizontal resistance right here that we have managed to start closing above, and this is coming in at 94 or 9400 about. So if we can maintain above 9400, I think another attempt back up to 9550, 9600 would be pretty normal, since we're just ranging in this area right here. And we're going to want to look to close above here. And this is that horizontal I showed at the top of the video going all the way back. So if we can start closing candles above here, I think you're going to see a nice pump up. All right. Until then, you're pretty much stuck in this range. And yesterday and the day before, it looked like we might have had a head and shoulders forming. You had the shoulder here, head, and a shoulder here. And it was looking pretty good, and we actually had that move down, but it wasn't strong enough and got picked back up. So we could probably toss that head and shoulders idea out the window. Right now, just looking to see which way the range breaks. Nothing too exciting, slow weekend, but I wanted to catch y'all up, show you the levels, so that you're prepared. Once price starts moving and we break above this, or we break below that, that's going to be your next signal for a major move to the downside or upside. All right, that's going to be it for us today, guys. Hope you have a great rest of your day, and we'll see you most likely tomorrow. This is Crypto Rolly, the crypto watch that never stops. Hit that like, comment, subscribe, tick the bell for notifications. This is not financial advice. We'll see you next time. And I'm out.